When you have a washout like we just had, you're really left with like core fundamental value, and that's what people are building now.
Hello and welcome to another episode of the BetaKit podcast. I am Douglas Saltis, editor-in-chief of BetaKit, and along with my co-host Rob Kennedy, this week we talk about cryptocurrency. Or NFTs? The blockchain? Web3? Maybe just digital assets? Pick your poison. 2022 was not a great year for any of the terms or technologies I just mentioned. What was once up and to the right is simply down, down, down. And that momentum has already carried itself into the new year. Crypto.com, Coinbase, and Blockchain.com have all just announced significant staff cuts. CoinSquare pulled out of its CoinSmart acquisition deal to possibly merge with WonderFi. We're going to keep our eyes on that story. And then there's the standard mix of general clown show, like the Logan Paul Web3 NFT CryptoZoo mess, and then whatever Sam Bankman-Fried, the totally under arrest founder and CEO of FTX, is up to on his Substack? What? I could go on and on, but suffice it to say that we thought that the new year would be a good time for a Web3 vibe check. And because Rob and I are noted pessimists, we've brought on an optimist. Satraj Bambra, partner at Round13's digital asset fund. Bambra isn't here to defend an industry or the behavior of those within it, but he does provide a lot of context and perspective on a variety of those topics. Why the recent Web3 washout is good for the long-term health of the space, why he actually prefers a focus on digital assets rather than labels like Web3 or Web5 or Web whatever. How the metaverse might be the killer app for digital assets, as revealed to us through Roblox. And what it is about this space that seems so appealing to the current generation of engineers. In short, the opportunity to add new layers to the internet. So strap yourself in. This one is going to be all over the place in a way that only the BetaKit podcast can. Let's dig in. Okay, Satraj, I think before we get into the whole conversation about what's going to go on with digital assets, Web3, NFTs, crypto whatevers throughout the year, we should probably talk about your involvement in this space, both personally and professionally. So why don't you give our listeners a bit of the Coles Notes bio on how you come to play in this space?
Yeah, so I'm a software engineer by profession. I built two companies, both were acquired. One was in the apps and SDK space. Right after the first acquisition, I got into Ethereum very early on. Being a software engineer, I was very intrigued by the whole world computer thing that's decentralized. I was there for the 2017 mania. It's pretty crazy. Never seen anything like that before. And right after that, following on what we had built before, we wanted to build something in crypto. And I think that's sort of where me and my co-founders, we came across Stellar. They had an on-chain order book, and we're like, let's build a wallet and decentralized exchange. So we ended up doing that. We ended up building something pretty decent, and we were acquired in 8 months of starting. So that was like my first forte as a builder in crypto. And post that, I've literally just been in investing, understanding more about crypto. So I've been there for a while.
So you're an engineer, you've exited, and you've got a large pool of capital to deploy in the space. I think that covers all of the bases that we want to cover for this, which is perfect, which I think, again, for our audience to give a sense, because Rob and I have no bona fides when it comes to this stuff. And I would say for regular listeners, we have remained relatively skeptical about this stuff despite our best efforts. I'm wondering maybe if you can kick this off, because we did the year in review podcasts recapping what we've seen happen in the market. And I would say across all sectors, it's been a down and to the right trend, but particularly in Web3, in crypto, in fintech adjacent, and NFTs, it's been really down. What is your pitch for digital assets in 2023 specifically? And then how is that different from like the prior year pitch?
Yeah, that's a great question. I think the way I'm seeing it right now is I'm pretty excited. I think a lot of the bad stuff in crypto has got washed out. I think one of the things we must remember in the space is because you can tokenize projects, you're almost essentially creating liquid assets that tend to be illiquid in markets, but they're liquid assets that can be traded very early on. And that obviously creates this speculative boom that happens when markets are heavily liquid. And that's what you saw It just didn't happen in crypto. It was in literally every assets, from used cars to crypto over the last 2 years. When the pandemic started, they started printing all this money. So I was pretty bearish coming into last year, given how euphoric it was. It's when I see like friends and family and people getting really excited about crypto who don't even care or know about crypto, it's almost a sign that you got to get out. And that's sort of like a book I read from the guy who created Renaissance, where he heard about everyone wanting to buy gold, and he started exiting all his positions in gold. So I've been following that rule pretty strongly, and it tends to work out. And there was everything, like there was people overpaying for houses. Like it was a bubble all across risk on assets and a lot of other assets as well.
Okay, let's dig into that bit. I was going to also, I'm interested in your pitch or your interest from the engineering technical component, because I know you said what attracted you initially to this was kind of like just the capacity to play in that space. And I personally know of a lot of engineers, programmers, developers who are like, I am really interested in Web3 as a new way of building. But just what you spoke to there, this idea of, hey, it seems like ma and pa investor are talking about their crypto holdings in terms of a speculative bubble, that seems like a really bad idea. Indicates to me, again, that so much attention has been placed upon the speculative components to this sector, let's say. Do you think that's inherent to this? Or are you kind of pointing to like a fundamental tension here, which is like, is it a valuable technology or sector if when normal people know about it, it becomes less valuable? Because that's not how email or any other technology works. There are certain things where their value might be mitigated by scale a little bit, but the inherent value remains. And the example that you were giving, which fundamentally was super true, I hope you got out way before, but personally, but is indicative of like whether or not this is a thing or not, which I think is kind of what we want to have a conversation about broadly.
So I think that this is very valuable technology. For me, crypto breaks down into sort of two things. One, you have something like Bitcoin, which is digital gold. Like anyone in the world has a fair value holding of something like this. Like if you go and try to dig up gold and do all of these things, it's not easy to get gold in different parts of the world you are. So this is a digital version of gold. And I kind of always say that if you gave the gold miners the internet, they'd create Bitcoin and they wouldn't go and mine rocks. It'd be too much work. So I think this is sort of like gold 2.0. That's sort of like the adoption it has gotten till now. But the thing is, we're still very early. When you look at stuff like Ethereum, Solana, there's smart contracts, it's immutable contracts on the internet. Anyone can sort of like be a participant in a network. And that's sort of what tokenization is all about. As you grow the network, you can be an equal opportunistic participant. And I think that's a big deal. So on like what they call Web2 technologies like Instagram or Facebook, you're there putting your pictures, you're providing all this content, but you're being monetized. The whole idea behind the Web3 is that you're one of the owners of the network. Since you're helping bootstrap the network, you should also be getting a fair share of the network.
So like the problem or the interesting thing here is no matter what technology you're talking about that lives on the blockchain, ultimately there is a token and there's a monetizable thing there. So does that inherently create bad actors that are fucking around with shit? No matter what the thing is that the part of the problem?
Yeah, because you kind of have to like sell the thing to get the value in Web3. So you're incentivized to not only participate, but participate early in.
Yeah, like who fuck around with the value of shit independent of the actual value of it.
Is that even a fair like understanding of this?
So I was a kid when the .com sort of bubble bursted. But when I went back and read about it, people were basically putting up web pages and going public. It was a new novel technology. You could put up a web page, you'd be a .com and you'd go public. I see that very, very similar to what we're seeing right now, which is you have an inherent technology that's actually progressing pretty quickly under the hood, but you have speculators because it's so easy to go and create a useless token and market it well, that when there's a lot of liquidity in the market, you can take advantage of this. Now, what happens is you have lots of different types of players. And I think our big 2021 invention was leverage, how to really lever up on illiquid tokens. And we saw like everyone from lending to big exchanges like FTX just going absolutely bust in that process. So pricing cycles in general, they create a lot of interest around the space. They get a lot of people interested in the space. a lot of people lose money, but with each pricing cycle, we get technology builders that come into the space and get excited about the underlying technology. And I think this keeps increasing every cycle. The problem is we're also in a macro deflationary cycle, which means liquidity is being pulled out of the market. So crypto is pretty much risk on at this point, and it's going to behave like that.
Is there a reason why at Round 13 you're referring to this specifically as a digital assets fund? Like, I was actually surprised that you're not throwing Web3 buzzwords around like a t-shirt cannon at a Raptors game, unlike maybe other competitive or aligned funds. Is there something relating to the thesis there, or a narrow beam focus? At some point we should probably talk about the thesis here, but I think you were kind of touching upon it in terms of just now, and maybe even that what the 2023 pitch is like, well, the technology cycles are getting, the speculative thing is still a dumpster fire, but we're seeing technology cycle work to have more stable, more valuable networks.
That's right, and I think that's what I'm seeing and what I'm excited about in 2023, and the people entering the space. Like, we've invested in entrepreneurs who were dismissive of crypto in 2017 or 2018 and did really well in their Web2 companies, and they're actually building the next generation of crypto companies. So the other thing that we forget is the talent cycle in this is much stronger than it was in the past. Like, you have people who've worked in like big companies at scale, product managers, designers, people who understand user flows. So we're slowly but surely walking towards like mass adoption through a well-built crypto ecosystem.
Why are they less skeptical now? And maybe whether or not you want to talk about your own portfolio companies or just broadly, for the good morning, keep building heads out there on social who are getting into this now. And again, I often find, separate from the purely financial speculative, like this seems to be an easier racket than real estate kind of game, there are a lot of true blue bona fide engineers who seem really excited about some structural things here. Why are they less skeptical now? Is it because you had talked right off the top about a little bit of a correction in some of the bad actors getting into the space? Is that wholly true? Like, where's the optimism coming from generally from the founders that you're talking to or looking to invest in?
I think everyone comes because they're excited about the gains in prices. They come as soon as that sort of bursts out. They sort of kind of question why they were here, and the ones that remain tend to be the ones who are excited about the whole idea of building good decentralized technologies or good immutable technologies. Like, they're transparent. You can sort of like create value through tokenization. Like, there's a lot of interesting things that people are coming and sort of seeing, and some are seeing the new financial system, some are seeing the new technical backend or rails to sort of build their products on. So I think it varies, but I think people are seeing and we're beginning to see like creative outlets of how to use smart contracts, for example. I think that it's pretty broad because it's very new. And at the end of the day, for the space to really be successful, it needs to reach mass audiences. And that's going to happen through the commercialization of the applications being built on top of all these like blockchains.
I was a developer at the end of the .com boom bust. I'm sorry, happy and sorry to say. I actually was around doing front-end work actually back in those days. And I'm curious.
Rob.com?
Yeah, Robcoin. I actually see a lot of parallels here in the technology. So like, let's unpack Web3 just for a second for our listeners, because I'm curious to know whether do you have a favorite part of Web3? So like putting the crypto piece, which is the thing and the blockchain, the foundations upon which these things are built on, you see dApps, decentralized apps, you see NFTs, you see DeFi, you see a whole bunch of different technologies or solutions that are kind of being built upon the blockchain. There is some parallel, like for example, to me, dApps remind me of BitTorrent, right? Like peer-to-peer, there was, back when BitTorrent was cool, aside from pirating, people are like, you can run apps locally and we can share the bandwidth and stuff like that. So there is a metaphor that reminds me back of those things. But are you particularly excited about any portion of the Web3 stack? Are they all equally exciting?
Rank them from like least optimistic to most optimistic.
I will definitely go into that. But I'll sort of put a context behind sort of why I'm reaching there. So ever since I've sort of been in crypto, what I've been actually following is user adoption. So like I come from the background where we build actual applications that people use. And I've always been sort of finding what's the best way to sort of keep reaching that in crypto. And that's sort of the thesis I've been using as an investor. And as I sort of followed that, I've seen that faster scalable blockchains are definitely a big thing. That's why we sort of built on Stellar the very first time. That's how we sort of came across Solana later on. So there's definitely the idea about being faster and better. It's there, but there's also decentralization. So you look at the idea of using Bitcoin and especially USDC on Ethereum, for example, or Solana, it's like transferable all over the world. So if you live in a country where your coins just lost like 60 or 70% of its value, you can actually hold USDC in your wallet and you're actually hedging against some sort of inflation. So those values of crypto are far reaching outside the Western world than they are over here. But the part that I'm very excited about, especially when it comes to adoption, is this whole idea of the metaverse. and when I first saw it, I thought it was like pure bullshit. I'm like, this is as creative as they can go to pump a coin. Like, let's metaverse it. But what happened was I have a 6-year-old and he's playing Roblox. And I'm seeing him playing with his friends. All the kids at this between 6 to 12 are sort of playing Roblox. And then I noticed a very interesting trend that I was no longer spending any money on toys. They're all Roblox gift cards. So these kids, in my opinion, they live in the metaverse. They transact in the metaverse. They just don't know it's the metaverse. That's sort of like the term. So I think when it comes to gaming, traditional gaming is sort of like told crypto's kind of like fuck off. We don't need crypto.
Yeah,
we
we've
need
been doing
tokens.
digital assets for years. It's called horse armor. It happened 15 years ago.
These kids, they care about the digital assets a lot more than I've ever seen. So they care about moving them across games. They care about owning them. They care about trading them. And I feel that games that start getting built for the 6 to 12-year-olds, where they're using crypto in the background, where all their assets are NFTs that they can trade and swap, I think this is going to create the biggest user adoption in the gaming space for crypto going forward. And these are going to be the next bunch of super users that are going to bring us on into these metaverses, just like we brought our parents onto Facebook and Instagram. So that's sort of something I'm really excited about. The other one I'm excited about, which for me is really Web3, is about self-custody and centralized applications working together. So I think that for me has become a much clearer trend to understand.
Like you don't log into one of the big 5 banks to
That's
find
right.
out where you're
You're
holding
you.
your funds, but you have access to digital services.
Exactly. The problem is the user experience around these things are very quirky right now. And that's because it's all very new.
Oh, I'm only going to point this out just because we just did a review of our most popular episodes of all time on this podcast. And it happened to be our podcast about DeFi, where we had a very similar conversation learning how nascent DeFi is and basically rebuilding the finance stack. So if you want that episode to remain the most listened to episode of the BetaKit podcast, I really recommend you check it out. We were talking to a startup called Conduit. So I guess with that, I want to go back to, I think the nature of this conversation is one where we keep going between the financial value to the tech layer to the social component. I'm wondering, when you're talking about those digital assets though, is there currently anything on offer right now that equates to that? Because the Roblox people would be like, we're already doing this and doing quite well with it, thank you very much. And then there's Axie Infinity and Logan Paul crypto zoo scams and like NFTs based on Jack's first tweet. And those two things, I know the inherent or the personal value of the digital assets that I earn or pay through gaming. And I know that there have been games such as World of Warcraft or Counter-Strike, Team Fortress, other ones where digital assets earned or created in those games generated like tons of money on the open market. Like we've gone through the financial implications of gaming. How does crypto walk into that space and provide anything better? Because it seems to me that currently NFTs, as they're promoted and constructed, are mostly just the free iPad to get you to come into the bank of crypto. It's just a tool to get people to buy more crypto. And that doesn't seem to reconcile with the Roblox example or the metaverse examples or things like that. So where's the bridge there? Is there anything you can currently point to that says this is the 1.5 version of that?
Yeah, so we did invest in a startup called Improbable Worlds. They've been there for a while. They build simulation software for the UK and the American government for military sort of like stuff. And what they're doing is they're building this base layer where you can build your own meta world. And across this meta world, you can go and use assets across, you can transact across, you can swap across, you can own forever. And I think this becomes like the core difference. So Roblox is a closed system, right? And you're limited to how many developers come in, build, and all the experiences within Roblox are kind of similar because it's
Usually
kind of like
one,
building
usually owned by EA or Activision or Microsoft. It's very
Exactly.
unfortunate for me as a gamer.
But when you look at something like Improbable, you have different types of meta worlds. You'll have like the Bored Ape Yacht Club. You'll have the Major League Baseball building on there. Like all these different people building, creating different experiences, and you're gonna have like shops there where you can buy Gucci bags. Like, but I think that when people are going to be building for the 6 to 12 year olds, where you have your own wallet, you have your own ownership, all the stuff, your assets that make up your avatar, for example, are stored over there. You can actually trade them between your friends very easily because you can't really do that on Roblox as
Yeah.
easily. You can sell them in the open market if they appreciate in value. If more people want them, or you're one of the earliest people to get them.
Yeah, right now I
think-
can sell a login to an account that has that stuff, or maybe gift them if the vendor or developer allows for that. So I guess, are you saying with this, and it's weird, wasn't expecting a conversation. I should have expected in 2023 somehow we would be talking about the metaverse.
We're not talking about the AI, okay?
When we talk about the tiramisu layers of this stuff, right, where it's the dApps, blockchain fundamentally, DeFi out there somewhere dealing with like digital real money, and we're talking about this other digital assets. Is the metaverse a requirement for this stuff to work? Is like a truly always on persistent digital realm necessary for us to want these things? Because we currently live mostly digitally now. There's been a lot of talk about Matthew Ball's new book, The Metaverse, and like how it's going to be built. And it seems to be a bit of a tautology where it's like, if we're ever going to have a metaverse, everyone's going to have to do all this stuff to create a metaverse, and it's going to be 3D and virtual to replace the current metaverse, which we have, which is like Steam and the internet. Assuming for a minute that we don't get Meta, Mark Zuckerberg level, or any other version of like us wearing headsets and strapping ourselves in like every 90s sci-fi movie we watched, can you see some of these things coming together in a way that just doesn't exist already right now? It seems like we're talking about emergent potential technologies dependent upon another emergent potential technology, and most of the technologies we have now at least had a minimum viable value to be iterated on, rather than, well, if we build this thing and everyone comes, it's going to be awesome.
Yeah, no, I get your point, but what I'm trying to say is that I don't think it needs to be into like this whole VR AR sort of thing. I think it's really about gaming experiences and ownership. That's what I'm sort of focusing on. So you can create interoperable gaming experiences across fundamentally different games on the App Store, for example, with developers having an SDK where they can plug in and you can create the same character that moves across different experiences made by different people. You can sort of share and move those assets across a common bridge. So I kind of feel that the metaverse is all about like ownership within different contexts. And I think that's a new experience built within a current experience in a sense.
Again, maybe to follow up, again, that's why you're talking way more about digital assets than Web3, because you don't necessarily need any Web3 technology for that. You just need better developer SDKs. And the Fortnite example is a great one. Most people like playing Fortnite are playing as some other character from some other IP, because Fortnite is the coolest place to be Spider-Man or Doctor Strange, or man, I just saw they got Dr. Disrespect in the WWE game and stuff like that. The IP cross-pollination is crazy. They made a Warner Brothers fighting game where Bugs Bunny is beating up LeBron James. Like, that stuff doesn't require blockchain technology, which is why your fund is a little bit more focused on the digital asset component of that, because the underpinning tech is separate from maybe the experiences that we're looking for.
Yeah, I think that sounds about right.
Because one of the questions I think that we had was, it seems like, and maybe this is us getting caught up in it and a lot of things getting inflated, why it seems like we're never talking about the technology underpinning these new circumstances. It's always like the financial component, it's the speculative component, it's the play to earn component, it's the DAO component, but it's never like, I click this button and things happen faster. And would you say that's maybe a smart approach going into 2023, that you should be looking at like which digital assets are driving value more so than...
I'm almost certain over the next 2 years that that will be the only talk that's worth having, because everything is going to be going down for a while. So when you have a washout like we just had, you're really left with like core fundamental value, and that's what people are building now.
Hey founders, are you considering building your startup on AWS? From Ada Support to Neo Financial, Canada's top startups build on AWS, but they don't do it alone. So whether you're looking for help solving a technical challenge, hiring the right engineers, or finalizing a fundraising round, AWS has all the resources you need to get started. There's a reason more startups build on AWS than any other provider. AWS is here to help you succeed from inception to IPO. To learn more or to start your cloud journey, go to www.aws.amazon.com/startups.
What strikes me is, I think it was like 2019 when the last sort of Bitcoin correction happened, if I'm not mistaken. I'm trying to remember the year. It was 2018, 2019, there was something. Do you think that the FTX debacle was really more about just plain old crime and really had nothing to do with Web3 anything other than the fact that, like, it seemed to me as an uneducated observer, it was just a Ponzi scheme and there was nothing Bitcoiny or blockchainy about it. But once again, it's speculators doing malfeasance, which then paints the whole industry as, oh, well, this whole fucking Web3 thing is shit. It's like, no, the guy just committed a crime. It just happened to be using the new hotness.
Logan Paul is an asshole.
Yeah, there's a list of people who are doing old-fashioned crimes with new-fashioned tools, but there's nothing inherent in the tools that's doing it. This is just people doing bad shit, yeah?
Yeah, FTX is a really good topic. I'll talk about it because I used FTX very, very early on. And let me tell you why people went to that. So if we remove the crime component out of this whole debacle, FTX was a fantastic product on its own. Like, it was miles beyond whatever already existed in the space. And for people trading and trading with size, it was the best place to trade, bar none. So they built a great product. Like, I'll give them that. And a lot of people ended up using it, and a lot of people ended up depositing money in, and they went crazy with all the marketing. But I think at the end of the day, it was all to run a Ponzi scheme, which is kind of sad.
So you're saying if they weren't criminals, FTX could have been successful as a product fundamentally?
Absolutely. I think they were a fantastic product. Like, you bought they were so good a product that I actually miss using them. And that's the reality, wow. Right? So,
man,
and you probably
they
never
could
heard
really
this.
use that testimonial right now. Oh man.
Yeah. So that is something that you probably don't hear now, but for the people who used it, it was a great product. And although I can be as safe in hedging and all of that stuff, I would have never thought in a million years that FTX would go down. And I think, like me, a lot of people, I lost money on FTX, but like me, a lot of people believe that it was such a great product, it just cannot go down. It's miles beyond what existed. But the thing from that is that we learn what sort of like scale and success looks like in a very small interval in crypto. And if the product worked as it should have and there was no crime, I think we would have been in a really good shape sort of moving forward. And now we're pegged back. But the silver lining for me is FTX showed that there was user adoption in the speculation and trading of these assets. People like to do it. And that comes down to not anything other than crypto, but humans. Humans are greedy. And every time there's going to be an easy way you can see your neighbor make money easily, you're going to want to participate. And that's for one of the reasons I think that crypto trading is not going to go anywhere.
It almost seems like you're saying that, I will just, for our listeners who hear us talk about this all the time, Satraj is coming on the podcast very politely to talk about what's going on in the space and answer our questions. So we're not trying to have him defend, literally defend criminals. But I will note, if you put the crime aside, is a really big but that deserves investigation, whether or not it's inherent to the
100%.
system. It almost seems as
Yeah.
though you're saying that even though kind of some value was demonstrated, that like finance is actually the worst, if not killer app, initial app of blockchain technologies because it seems to have a motivator for illegality when you're talking about unregulated, decentralized things. Like, are you leaning that way? Like that what is happening in the crypto finance space and like the NFT space is mucking up all the other work going on? Because for us externally, I would say one layer more aware than the ma and pa. It seems like that's all we can find. We could go maybe 20 minutes deep on a list of games that have been revealed as scams, horrible play to earn components. Again, to that point of whether the illegality is like a killer feature of this, it seems like you wished that digital assets kind of got out of the finance speculative space for a couple years so something new could be built on it.
No, I think like if I sort of go a little bit more into the FTX thing, right? It became the biggest advertisement for why you need crypto in a sense. It was a vehicle for trading crypto assets. It was centralized. It was pure fraud. Like nothing about what they did is good in any way. The only thing they did do is build a good product that people used and worked until it stopped working. As soon as it stopped working, it became the biggest advertisement for crypto. So what I mean by that is that now imagine you had the same trading tool set, you had your own wallet, the funds were never able to leave your wallet. You're going to use some technology like ZK proof or to sort of prove that you own this money. This money can be traded. It never leaves your wallet. The blockchain is transparent, so you can see all the money moving in, all the fees being collected. So at the end of the day, when the next FTX is built or next decentralized exchange, you're going to be getting the benefits of both worlds, and you're going to get all the transparency.
But isn't
and
that
you're-
just Quest Trade? Like, can I again, it's obvious that I watch a lot of Raptors games because you can't watch a Raptors game without seeing like 5 Quest Trade commercials. But like, why is that an argument for crypto when I can just use the current exchange apps, buying assets with the digital money that I pay myself twice a week through BetaKit? Like, where is the argument for a different form inherent in that? Because, and let's bring this back to the washout you were talking about before. The retail investor is going to go nowhere near this stuff because they've absolutely lost their shirts on scam upon, or even just huge dips in the market cap of everything tied to these assets. What about institutional money, like large pension funds ever touching this space again because of what's happened to FTX and Celsius? Like, what makes you think it's an argument for when it seems like everyone from the retail investor to like some of Canada's largest pension funds got burned with this and are probably less likely to ever go near it again? Because I guess I'm just not connecting why it's an argument for when we could just stick with what we have.
Well, what we have has lots of. It is regulated. Your money is generally very safe because you have a backstop, right? Like if something happens in the traditional financial system, it's generally going to get bailed out by the government. Crypto doesn't have any bailouts, so it by its strict nature of no bailouts means the builders have to build better every cycle. Like they have to come and build better stuff and more transparent stuff. And as we sort of like move on, I think you're going to get to a situation or a point where crypto will be the financial rails because it's the most transparent way to trade and move money, assets, and everything. And you have seen that from people like BlackRock talking about why they think that tokenization of assets is going to be sort of the future.
This is that pure like DeFi is a better bank than the current banks once it's built kind of thing.
That's right. And if you try to send a wire, you can see how long it takes. If you actually buy something in USDC or use crypto for it, it's super efficient and fast. So I think that not only is the value transfer a lot more efficient in crypto, although you have to figure out the kinks around the user experience because remembering 12 of 24 word mnemonics, all of this stuff is pretty complicated for first time users. So the onboarding is probably going to get a lot better over the next few years. But the other thing is that as we are building a world where assets are tokenized, they can be traded by anyone, anywhere, you're sort of removing the friction in the flow of money and the flow of assets. And I think that's the world we end up in the next 10 years. And I think a lot of stuff that you're going to see, if we have a discussion again in another 4 or 5 years on this podcast, we'll come back to this and say, wow, we have actually progressed on sort of building these underlying rails in a much better way.
I hope you're right. I think, using the Gartner hype cycle, where my money's on, we're in the trough of disillusionment, right? So some shit's happened. People are like, this technology is bullshit. Obviously, this is not the first iteration of it. And it probably, as we are discussing, it's not going to be the last before it's shiny and ready for prime time for normal humans. But what I really would love to hear your thoughts on is the internet itself was decentralized to begin with. The whole point was American military, when they get nuked, the whole US doesn't go down, part of the US goes down.
Utah can email someone in Colorado,
yes,
basically.
Yes. So that was the point. It was truly a decentralized system. So are we really, because what we've seen with technologies, are we really disrupting things? I know this is about decentralizing finance and really decentralizing trust, as opposed to putting it in the hands of a few people. There's the political agenda. I'm not saying that in a negative way, but there's the political ideal here, which is decentralizing trust and putting your control of your stuff, your information, your money back in your hands. That's kind of the sort of utopian vision of this, which is not dissimilar to the original internet. Are we doing that really, truly, or are we ultimately in 4 or 5 years, when we talk, just shifting power away from Google, Amazon, Citibank to Satraj Bank, Rob Bank, and Douglas Bank?
Hopefully, if I can stay in front of the feds.
No, I think part of what you said is pretty right. I think we're going back to our roots of some form or way of decentralization. We're going to a value transfer system that is peer-to-peer in a more truer sense. You're going to a world where ownership is also evenly distributed and you can be a participant in a network you end up bootstrapping. And I think these are the inherent benefits that a lot of people who have been part of these networks have gotten. There was a time in 2021 where people who had used certain decentralized products were getting airdrops. This was free money for them. Where did that happen when you're using any Web2 company? You know what I mean? It never, and some of this was very lucrative for some people. I remember reading a story of this kid in I think it was Ghana. He got a $100,000 airdrop.
2015, 2016, people would just hand out Bitcoin as a way to encourage interest in it.
Absolutely. So I think that crypto in its truest sense is all about giving power and control back to everyone, and that's the truer sense of it. And I think along the journey, you're going to see lots of bad actors take advantage. And that happens with every nascent technology, right?
I guess my question is less about bad actors. I think you'd argue Jeff Bezos, Larry, and Sergey, and those folks are not, depends on your definition, but they're not inherently bad actors. They've changed the way we live our lives, but they've taken away power from Walmart and Microsoft and taken it to themselves. And so I guess what I'm wondering is not the bad actor stuff. I think we've covered that, but do you think that it's inevitable that someone like an FTX, maybe that's a bad example because but some other core elements of the society within which we live are just going to be owned by different actors, and we're playing in their sandbox on their coin?
That's a great question. And actually, that's where I was going to, which is when someone does come and build the next version of something like this, they will know that what FTX do will not work going forward. And I think that's what I think is the most positive outcome from something like this, where the people building will build much better systems that are not going to be doing what centralized actors are doing in the space. It's the centralized actors that created all the washouts in crypto, at least a majority of them over the last year.
That's interesting because you are truly, we talked about the Web1 bust, which makes this moment the current Web3 bust, which means you're waiting for Web2, which will then be Web4. Could I make that more confusing? Maybe a simple way of asking it would be, what do you expect will then bring people back? What would be a signal to both retail investors and pension funds like teachers that this new thing is the Facebook of this era. I guess one component here that we didn't really talk about is like how difficult it is to be with that personal ownership or even just in investing diligent to really understand what's going on behind the scenes. But what would be some of the markers? Because again, you've got capital to deploy here. What companies are you looking for? What are signals, either technologically or in terms of like business case or use case, that you're looking for that signal some sort of like, emergent shoot sprouting out of the forest fire that's been the last year and a half?
If you look at something like Ethereum, it does make money. It makes fees. There's demand for those blocks that get used, and it creates revenue for the network. So they all have their own. They have different forms of revenue channels. I think things like what has just happened with FTX and now Genesis, and the bar for crypto has gotten much higher, and that's a good thing. The self-fulfilling prophecy is it's not going to be as easy to do the last thing that you just did because there's no backstop. Remember, so everyone's going to come in. The people who are building here are going to be thinking about user experience a lot more than they thought about it in 2020. They're going to be thinking about custody a lot more than they thought about it. So when you sort of put people thinking about this technology stack in a much deeper way and how they want to incorporate ownership, how they want to incorporate decentralization, and how they want to incorporate flow of value, ownership of value, then you're going to get some pretty magical stuff. And we're sort of like looking along those paradigms in what we want to invest in. And I think that's the part where I say, like, if you look at the talent curve entering crypto, especially still there now, is attracted to these things that you can build around it. And they're still here building. And a lot of them they raised last year. They're well capitalized for the next 2 to 3 years. So I think that what you're going to see is some pretty special stuff. And just like any traditional web company, they're going to have to find users. They're going to have to market. They're going to have to sell their benefits. And eventually, the other thing is tokenization has been really badly modeled. and you're going to see some pretty innovative, pretty thought-provoking tokenization models come up in the future where where the token is not just a proxy for dumping it for more US dollars, but you're benefited from actually holding it. So you're getting some sort of value from the network. And I think all the brains in the space that are thinking about all of these things are a lot brighter than they were in the past. And I think if you take that small sort of thing I just said is a reason to be bullish in the long-term future of what's being built.
It seems like some of these fundamentals on decentralization and custody and that are the conversations. Like there's kind of a bit of an inward looking moment here for people in this space about how to maybe re-architect some of this stuff. Would that be accurate? Are there other conversations that you're hearing or being a part of that we haven't really addressed right now for people in the space?
Well, with the amount of money people have lost, regulation is obviously a big conversation. And I think that you're going to see a lot of that coming into play in the next 2 years. And I think regulation will create some form of safe haven for the builders when they're sort of either tokenizing as securities or they'll be tokenizing as utility. Like these types of, I think, stricter definitions of whether token is an asset or a security, or like stuff like this is going to be super important. And how people will build their networks and how people build their products will sort of like follow these guidelines. So guidelines are going to be important because the other thing we're sort of looking at is who are the builders themselves? Like, what are they thinking? What are their backgrounds? So if they're coming from, like, a lot of them we know who are from Web2 backgrounds that have scaled companies, that have thought about user experience, that follow users' journeys across their products, so they really know like how to measure churn and all of these things. I think those people are building in crypto too, so they'll be thinking about the user experience, and I think that is a not well talked about thing, but it's super important, especially for adoption, is user experience. Like, when people start using crypto without knowing they're using crypto, I think that's what sort of the point where we'll have made it.
Is that possible right now when it seems like everyone's just building off of Ethereum? If we're going to go back to basics here, do we have to go back to basics? Or is the architecting that we've started with anonymous white papers forward tie us in? Or can we just start a new chain? Like, is that, I guess that's part of the beauty of it, right? We can build again. Are people talking about going back to like literally like paper and re-architecting this, or how deep down it is? Because your point on when people don't know they're using crypto makes sense, because people don't often know what protocols they're using to connect to websites. That being said, most of those protocols can be described on a napkin to the average person at a bar in about 15 minutes, which I think points to their resiliency. Some of them were architected on a napkin, and that's why we have issues with DNS that's why Facebook can't find Facebook for a couple days. But are people having that conversation? Are they going back to that? Or is there momentum or a pot commitment to the current architecture? How much of DeFi is tied to what Bitcoin or Ethereum has done, or the work there?
I think Ethereum is at this point the most adopted smart contract platform, and they keep working and making it better. And now you have the layer twos where you sort of are looking to solve scalability issues, and they're sort of there's a lot of really, really good work happening there. And I think that you're sort of moving up the stack as it comes to Ethereum. And eventually you won't even know you're using Ethereum while using Ethereum. And I think that's sort of the basis of which that is going. On the other end of it, you have chains that are purely about the monolithic chains like Solana, Aptos, Su, that are all about speed. So they're sort of sacrificing some decentralization or quite a bit of decentralization for pure speed. And
speed
I
of
think,
what?
Transactions.
Okay.
So, and I think I remember sort of Stellar was like that in 2018. That's why we built on them. So, and I think that you have all these different networks. They might be used for different things. If you want to be more decentralized, you'll probably use Ethereum over Solana. I think it'll depend on the state of the application you're trying to build. And you might be using Solana if you're building something that you want it to be faster. They're making lots of improvements as well. So I think a lot of under the hood stuff is being worked on. And I don't think you'll see a lot of new layer ones coming up, but you're going to see a lot of applications being built to serve different purposes. Some we haven't even thought about, some things we haven't even seen yet. So they'll be built across the board depending on where the developers think they want to use a certain network.
Okay, I like the idea of Web3 is building towards its Web 2.0 moment. Isn't that just Web 5? Isn't that what Jack Dorsey's doing? Isn't he the Square plus Twitter guy is going to build Web 5 for us? Isn't that what we're talking about here? How do you break these things down?
Yeah, so for me personally, it's crypto. I'm not a big fan of the whole Web 3, Web 4, Web 5, Web 6, 7, 8, 9, 10, because it's just too many versions to keep a track of. Sort of how I break down is it's Bitcoin, which is decentralized store of value. It can be owned by anyone in the world. It can be moved freely. That's sort of where Bitcoin sits, and the rest is all about self custody around smart contracts, building applications.
Of any type of digital asset, the horse armor.
Exactly. And that grouping together is and then where you have metaverse, you have NFTs, you have all of that stuff. It all comes under, that's a separate thing for me.
Do you think more people are working on building that second thing now than the first thing after the washout we've seen in the last 2 years?
I think a lot of people are generally just focused on that thing. That is the most interesting part from a developer's perspective, because you have smart contracts, you have all these immutable contracts you can build where it's a form of automation on chain that exists that cannot be tampered with, and that's pretty cool when you sort of see how DeFi works, for example, how you have all these the non-centralized lending platforms and how they sort of functioned when all of crypto's centralized lending functions crashed. So
is that speaking to your own personal history, is that really the allure then? It's the opportunity to rebuild the internet using net new standards that weren't based upon things established in the 70s? Is it really we can literally do this again? Couldn't we make it way cooler?
No, I think that's probably a bad take at it. For me, it's really we're adding to that, and we're adding new forms of features and functionality on an existing stack and making it a lot more. Users can own more. We can write all these immutable contracts that people don't have to rely on central parties, and all this logic can be added now to the internet. And I think that's sort of how I'm seeing it.
Satraj, thank you for coming on and talking this through. Obviously, you have a vested personal and professional interest in this stuff, but we appreciate you speaking human language to us about the state of this sector and what it needs and what opportunities might come in the future.
Absolutely. Thank you so much for having me.
The BetaKit podcast is produced by BetaKit Incorporated. It's It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.